Well, let's then turn the spotlight on the housing finance space. Now, the cabinet approved the PMAY Urban 2.0, the Pradhan Mantri Awas Yojana, the 2.0 version, to talk about the potential impact on the sector and on individual companies. We have with us Rishi Anand, MD and CEO of Aadhar Housing Finance, joining in. Rishi, great to have you on. So obviously, there's a fair amount of excitement around this scheme. We spoke to some of the public sector entities as well, and they were telling us about how this is sort of getting bigger and better. But you tell us, what is your exposure, first of all, in the first version? Was there any exposure you had? Did you disburse any loans which come under the first round? And now with this 2.0 coming in, what is the impact overall for affordable housing and, of course, for Aadhar in specific?
Great. First of all, good morning, Surabhi. Thank you for having me. Okay. With regards to PMAY version 1, which got over in March 22, Aadhar Housing Finance gave out subsidies to about 82,000 customers, which was almost 50% of my total existing customers, to the tune of 1,800 crores of total subsidy. So we were a substantial player in the segment that we operate, which is typically EWS and LIG. As far as PMAY 2.0 is considered, or that has been, as you said, it's just got launched, the contours are almost out. I would say, and the industry echoes what I'm going to say, is it is a better version of PMAY. It is a very well thought through, drafted PMAY version. For example, while the total subsidy seems to be going down from a 2.5 lakhs to 1.8, but the subsidy now comes over 5 years. So it is total subsidy of 1.8 divided by 5 years, which effectively means for housing finance companies like us, the AUM, so the way it works is whatever subsidy comes to the customer comes in the loan account, which effectively means my AUM goes down by that amount. Now, in the current scheme, the AUM is the fall in the AUM is going to be split over 5 years. More so, the consumer will have to be non-delinquent for 5 years, and the percentage of BT out, which has been a concern in the housing finance sector, will also drop because the consumer has to be listed through one company and he has to stay with one company for 5 years.
Okay, so it tightens up maybe some of the, let's call them, maybe, loopholes or pitfalls that perhaps certain entities would have taken advantage of earlier. So it tightens up those loose ends, and the spread is now over 5 years, as you're saying. Now, let's talk about the numbers here and now. Let's talk about the FY25 targets. We're almost done with half the year. In terms of AUM growth and the total AUM, the size that you want your book to be at by the end of the year, what is that number? And this will only roll out, I guess the impact will start flowing through only in the second half, Q3, maybe Q4. What will be the exposure or expected exposure to PMAY 2.0?
So, Surabhi, we've guided in your channel itself, we've guided multiple times that Aadhar is looking at a growth of 18 to 20% on disbursement, which will translate to about 22 to 24% on AUM. And as we speak today also, I would stick by those numbers, given the performance in Q1 and Q2. While the Q2 numbers are still to be published, but indications are good. Yes, you're right. The PMAY subsidy scheme effectively will be, I would say, October onwards. While the scheme says 1st September onwards, any consumer who has availed a loan is eligible for PMAY subsidy. But effectively, I think from October, mid of October onwards is when we are going to see some traction happening towards PMAY subsidies. I'm sure there is this question around what is the kind of growth that everybody is expecting or the industry is expecting out of the PMAY subsidy. For that, you will have to understand that this is a refinance scheme. So first we will have to go out and lend, only then the refinance happens. I would say on an incremental basis, anywhere between 10 to 12% growth is what we are all looking at.
All right. Hi, Mr. Anand. Good morning and good to see you. Ben, so you have detailed a fair bit with regard to the PMAY. Tell us about how do you see yields panning out? I think your yields currently are around 14% or thereabouts. You could correct me on that number. But you have been focusing more on LAP. So how does, change things from year on? And also your cost of borrowing. How does it compare with what we saw, say, in the first quarter from now? And how do you see things panning out from year on?
Okay. Hi, Nigel. Yes. One is, I think you had three questions. One is on cost of borrowing. Cost of borrowing, I would say, from our perspective, looks like they have peaked, and what we are going to see in the coming quarters is only going to be either, it's going to be cost of fund is either going to be flat or it's going to be slightly. We are expecting that December quarter there should be some announcement by RBI on the downward trend of yields. As far as our spread goes, we have maintained a healthy spread of 6%, and we've always guided the market that upward of 5.7% is the kind of spreads that we will maintain. Either ways, whether the interest goes southwards or northwards, we work on spreads. We have an 80% book which is floating, 80% liability which is floating. So whatever comes in terms of incremental yields, incremental cost of borrowing will be passed on to the consumer either ways. So that's how our spreads are. Yes, on incremental yields, we are at 14%. On the book, we are at 14%. Incremental, we are at about 13.6, 13.7%. So I think I missed one of the questions you asked. If you can come back on that.
LAP as a percentage of your total mix has been moving up, I think so. How do you see that panning out?
The LAP, right?
Yes.
Okay, so loan against property, it's a part and parcel of the mortgage business that we do. As the regulator allows us, Nigel, 60% of our balance sheet has to be individual housing loans, which would translate to, for a layman, would translate to about 70% and 30% home loan and non-home loan respectively. Today, Aadhar stands at about 25, I think, and the management has also guided multiple times. We will be at 75-25% home loan to non-home loan. So I would not say there is a substantial increase. In fact, it is a calibrated increase on loan against property, and that's where we would want to maintain at about 25%.
Mr. Anand, hi, good morning. This
Good morning,
majority of this comes from resale and sort of self-construction, etc., right? Has in the segment that you operate, has real supply started to come in a big way on the affordable side? Not yet.
So I would say, since we work primarily, Prashant, we work in the affordable segment. A majority of our consumers would buy properties which are already built, which is resale, as you said. There will be a 30-35% of the consumers which would construct on existing plot. Now, construction on an existing plot is actually creation of a new asset. So asset is getting built with that kind of loans. On the affordable segment, there is multiple state governments. There are multiple projects that have come in right from at various stages. We are currently, as we speak, talking to CIDCO on a big chunk of projects that have flats that have come in. So there are multiple states. I remember talking to Tamil Nadu about a couple of Tamil Nadu government, state government a couple of weeks back, Karnataka government, MP. So there are multiple states who've taken already lead into providing affordable housing. So it's a good place to be in today.
Okay, but yeah, no, I got that. So is getting you have the visibility of supply because we've had people who started with affordable housing going into premium because that is where the demand is, the money is. But you're saying that at least government initiatives, state government level, etc., there's visibility of a lot of supply now.
So yes, I would say two things here, Prashant. One is, yes, is there a visibility of supply? I would say completely yes. As I stated, I have been personally interacting with state government bodies, so I can there is a clear visibility. More than that, there is a lot of availability of properties in the outskirts of larger cities that we operate. So my consumer, irrespective whether he's buying from a government-led initiative or he's buying on resale and self-construction, the demand is looking very positive as we speak, Prashant.
Okay, all right. So we'll leave it on that note. Thank you very much for joining in. Good getting that perspective from you today. That is Aadhar housing and how they see the road ahead, and of course how they see PMAY 2.0 also sort of boosting their business this year. Stocks down about 3.5%.